In the last video, we talked about how a pastor can reap tremendous tax savings by properly designating a portion of his salary as housing allowance. The minister should request, in writing, a specific dollar amount to be designated by the church, generally equal to estimated housing expenses for the upcoming year. The church's designation of housing allowance must be set in advance of the minister receiving compensation in that year and must be documented in the church's records. It is ultimately the minister's responsibility to determine the proper amount to list as housing on their tax return. The amount the IRS allows is the lesser of actual expenses incurred during that tax year, the fair rental value of your furnished home, or the amount designated by the church. For ministers living in a parsonage, this process is much simpler. Their housing allowance will be equal to the fair rental value of that parsonage. The allowable amount of housing allowance will not be subject to federal or state income tax, but it will still be subject to the self-employment taxes for Social Security and Medicare purposes.